Namaste. In our two sessions, we have discussed what is financial accounting. We have also seen the differences between various branches of accounting and how do you get financial statements from the basic business model. In the second part, we went little more into details of what is a balance sheet, what is assets and liabilities, what are the types of assets, what are the types of liabilities, like say fixed assets, current assets. On liabilities you have got current, non-current liabilities and also the capital and owner's fund. We have also seen the balance sheet equation. Then we have looked at the income statement or P&L account, the components of income statement like income and gains or like expenses and losses, which gives you the various types of profits like operating profit or PBIT, profit before interest and tax, profit before tax, profit after tax. Now in this third part, we are going to look at the cost accounting, which is a very interesting stream which looks at the efficiency part, which helps in managerial decision making, and it is mainly targeted to the internal users. So here we are going to discuss what is cost accounting, what is meant by cost, how do you classify the costs. We have already seen financial and cost accounting, a very brief revision. These are the steps in financial accounting which is mainly targeted to external users. These are the steps in cost accounting, which is our main discussion point today, which will talk about the recording of costs, analysis of costs and the preparation of cost statements. So in cost accounting, we just don't record the cost transaction or a financial transaction, we record many more details. For example, if you have purchased raw material, we will not just record the amount, we will record the amount, quantity, the types of items which are purchased. We will also record the carriage inward costs, that is the transportation inward, the taxes which you might have paid, how to break those taxes on a particular item. So a detailed recording of cost is done in the first step. In the second step, the costs are analyzed. The analysis could be period wise, it could be product wise, it could be department wise and so on. Based on this analysis, suitable cost statements are prepared for various levels of users. We have already discussed what is management accounting. So we will go into now what is cost accounting. So the steps are known to you, talks about recording, it talks about controlling. So the objective here is to keep costs in check. This also deals with estimating. Financial accounting was not much involved in estimating the cost, but in cost accounting, based on the past data and the current trends, we try to estimate the costs. Suppose we have to give a quotation, we try to estimate the cost involved for the job, then we can add some percentage of profit and give a quotation. So cost accounting cannot just be based on the past data, it has to look at the possible costs in many cases. Similarly, when we want to control the cost, we have to set some standard that these are the likely costs, this is our norm. Then we can record the actuals and compare the norm with the actual. So here again estimation is involved and the reporting of costs is based on both the past data as well as the estimates. This is a definition of cost accounting. This is a process which begins with the recording of expenses, does the necessary calculation, helps in ascertaining the costs and also the controlling of costs. So the objective of cost accounting, first part is ascertainment, second part is cost control and cost reduction. Now both these terms appear similar, but there is a fine difference. Cost control is a process where some norm or some standard is set and we try to keep the cost below that norm. So, suppose a particular product is being manufactured and we know that the standard cost of the product is 10 rupees. We try to control the cost at 10 or less than 10. In cost reduction, we do some more research. We try to look for alternate raw material. We try to look for a better way of making the product so that the standard of cost, which is 10, itself can be reduced. So, in cost reduction, we seek to have a permanent reduction in the cost. The third objective is to assist the management in taking various decisions. As I gave you an example, suppose we have to make a quotation. We calculate the likely cost for a job or for the assignment, add the applicable profit, and it gives you a quotation price. So, it helps us in pricing. Same way, cost accounting also helps us in picking up a right choice. Suppose we have got two types of transportation choices. We can either ship our goods through railways or we can ship our goods through trucks. We have to decide which is a better way of transport. Even amongst, suppose we decide on road transport, there could be more than one suppliers offering you various services. So, you have to choose a better way of achieving a particular objective, trying to keep the cost low. A simple example which I think most of you would be faced is, now so many operators are giving so many options of various mobile plans. So, we have to choose a plan. There a decision making is involved, and so we need to collect the cost information of various plans available. This is how the third objective of cost accounting helps in the decision making. These are the various advantages of cost accounting. It helps us in identifying the unprofitable activities and in cutting down the inefficiencies. It helps us in doing some research and cutting down the cost, which we know is known as cost reduction. Now, here is an example of what is a cost, which anyway most of you understand that this is anything which is incurred on either a good or service to get the output in the hands of customer. So, you can see a factory production, from the production it reaches the customer. So, it covers all types of costs. It will include production costs, it will include administration costs, it will include the marketing costs, it will include R&D costs. So, anywhere our resources are spent for meeting the objective of ensuring that the product or a service reaches the customer is all included in the cost. This is an easy definition of what is a cost. This is a one more way of defining it. This is the amount of resources which are given up in exchange for any goods or service. So, various examples of cost include material, labor, electricity cost, fuel cost, and so on. There are also some costs which are known as capitalized cost, like the cost of fixed assets, which we transfer to balance sheet. Now, let us understand the classification of costs. Costs can be classified in various ways. It can be classified as per elements, as per function, as per direct, indirect, and so on. Now, this is the oldest way of classifying as per the elements. So, all costs are divided into material costs, something which we buy in a tangible format, in the form of labor cost, what we pay to various types of employees, starting from a helper to the managing director, is all in the labor cost. Then expenses, these are what we incur on various services which we buy. It could be power, it could be our telephone bills, it could be transportation, and so on. So, this is a very primary type of classification into material, labor, and expenses. The second type of classification is as per the function. So, any business can be divided into various functions. It could be manufacturing, it could be administration, it could be marketing, it could be R&D and so on. Generally the departments in the companies are based on the functions. So, this is a second type of classification. I am not going into too much details. The third type of classification is as per direct and indirect. Now, direct costs are those costs which can be easily be attributed to a particular cost center or a product. So, suppose we are assembling a PC, we know that a particular hard disk goes into that PC. So, the cost of hard disk can be easily attributed to a particular PC. But suppose there are 3-4 people who are assembling various PCs, it will be difficult for us to know the wage cost to a particular engineer to a particular PC. So, wage cost of a particular engineer is difficult to allocate to a PC, or let us say we are using lighting or we are using power. It is difficult to know that lighting is for which particular PC. So, power cost, wage cost generally cannot be easily ascertained, then it is considered as a indirect cost. I am not trying to say that all the time the wage is indirect. If we can ascertain it easily to a particular cost center, then it becomes direct. What cannot be ascertained directly to a cost center is considered as indirect. So, various examples of indirect costs could be security, it could be depreciation, it could be rent and so on. The next type of classification is as per variability. Now, certain costs change with the level of activity. So, if you produce more units, the cost increases, then it is known as variable. Certain costs do not change with the units, they are known as fixed. So, here you can see a variable cost which changes in the direct proportion to the output. The example is in the form of direct wages or direct material. If you are operating a vehicle, fuel cost will probably go on increasing with the use of vehicle. So, it becomes a variable cost. As against this, the costs which do not change with the level of activity are known as fixed costs. So, example is rent, property taxes and so on. Here is one more way of identifying it. A variable cost, it changes with the level of activity. So, many times it remains fixed per unit basis. Fixed cost remains constant, it does not change with the level of activity. So, it goes on reducing on per unit basis as you increase your output. The third type is semi-variable cost. So, it changes with the level of activity, but not in the direct proportion. We know the example could be maintenance cost. If you use your vehicle more or if you use your machine more, the maintenance cost will increase, but not in the direct proportion. So, it is known as a semi-variable cost. The next classification is as per controllability. So, when we try to control the cost, we look at a particular level of supervisor can influence which type of cost. What costs are under his or her control are known as controllable costs. What are not under his or her control are known as uncontrollable costs. The next classification is as per normality. All costs which are incurred in the normal course are known as normal costs. What are incurred in the exceptional conditions, for example, there is a fire, there is some too much of flooding which is not normal, then it is considered as an abnormal cost. The next type of classification is as per relevance. Now, this is related to decision making. Now, suppose you have got two alternatives, you pick up alternative A, then what are the costs relevant to that alternative which are affected because of your decision? These are known as relevant costs. The other type of costs which do not change irrespective of your decision are known as sunk cost. The example is, suppose you are developing a product, you have incurred 20 lakh rupees on the research for developing a product. Now the product is ready. Now you have a choice to launch or not to launch a product. If you launch a product, let us say you have to spend 10 lakh rupees on marketing and then you start making money, you will start earning revenue. If you don't launch a product, naturally you don't have to incur marketing costs. But you have already incurred your research cost of 20 lakhs. So the 20 lakhs which is already incurred is known as sunk cost. Now any decision by you to launch or not to launch is not going to change your research which you already spent. So research cost here is an example of a sunk cost. Marketing cost or a launching cost is a relevant cost. Now suppose you are likely to make a revenue of 15 lakhs. Should you launch or no? If you consider total cost, the cost of 20 lakhs of research plus 10 lakh of marketing, you will feel that total cost is 30 and revenue I am making is only 15. So a loss of 15. I should not launch. But it is not a right decision, because 20 lakh is already gone, it is a sunk cost. Today if you decide to launch, the relevant cost is only marketing cost of 10 lakhs and you will make a revenue of 15 lakhs. So at least you make a profit of 5 lakhs. This is how the classification of relevant versus sunk is extremely useful in the decision making. Now there is one more type of cost which is known as differential cost. Again it compares the two alternatives and look at the difference in the cost. There is one more cost which is known as opportunity cost. Now what happens is, when you go for a particular alternative, you lose other alternative. So a benefit from that alternative is lost, then that is how it is known as opportunity cost. I will give you an example. Suppose a particular person is a graduate and gets a salary of 30,000 per month. If that person goes for a post graduation, he or she will lose salary for 2 years. Then that becomes an opportunity cost for going for a post graduation course. So this is a revenue which is sacrificed or a benefit which is sacrificed. This is not a cash cost incurred, but this is a lost benefit which is also need to be considered when you take a decision. Now the last type of classification is in the form of product costs. Now product costs, which are those costs which are related to production of a product or a marketing of a product. The other ones are period costs, they are related to time. For example, rent. So it is charged based on time, or depreciation which is charged based on time. So we have seen major classification of costs, and this classification will also help you to understand how cost accounting helps in cost control as well as decision making. Thank you so much.